Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner. Now here is your host of Money Nation, Ed Gardner.
Good morning, everyone, and welcome to Money Nation. Today's guest is Joe Cunningham, the president of Worldview Capital. Joe is based in Minneapolis, but as the company name suggests, he has an eye on the global markets. Joe originally grew up in New Hartford, New York, good upstate boy. Joe's background is multifaceted. He worked as an economist under Jude Wanniski, a famous supply-sider, and an investment banker under Mark Combs, arguably one of the most successful emerging markets investors today. As an investment banker, Mr. Cunningham has originated and executed over $5 billion in transactions and has won numerous industry awards. Today, through the Worldview Capital, Joe manages a number of investments globally. He has in-depth experience in all aspects of portfolio management, corporate finance, and capital raising worldwide for both private and public companies. Joe has an MBA from the Thunderbolt School of Global Management and a BS from Northeastern University, where he played football. He signed as a free agent tight end with the Buffalo Bills in 1985. And I think the first question for Joe is, why are you a banker and not a tight end in the NFL? Welcome to the show.
Well, no, thank you, Ed, and thanks for having me. Simple answer is I could be the fastest guy on the trading floor. I couldn't be the fastest guy on the football field.
That's a problem. That's a problem. I think you did tell me once, though, one of your favorite times in the NFL, you did 4 preseason games. Is that correct?
Yeah, that's right.
I think you said the best time you ever had, though, was when you were hanging out with Joe Ferguson, the quarterback.
Yeah. No, Vince Ferragamo. Remember Vince?
I'm sorry.
Yeah. Vince was a prince of a guy. He still is. He and when I got cut, he said to me, "Don't worry, kid. If you want, you can go hang out my beach house in Newport Beach, and there's a Rolls Royce in the garage. The keys are hanging on the other side of the door."
Nice guy. Must have liked it. I remember too. I thought one of the tight ends got cut like a couple of days left. I thought you were shirt in for a job there with the Bills.
It looked promising for a while, but and I played to be fair, I played the best football in my life. So if I didn't make it, I didn't make it. You know what I mean? I saw some guys that were truly spectacular. Andre Reed was a rookie. Bruce Smith were rookies. So we were kind of tight in that whole group. And those guys went on to greatness. And I went to Wall Street. Hey, Ed, in the 1980s, Wall Street wasn't a bad place to be.
You're right. Got that right. I remember, too, there was the World Football League that you could have actually played with, but you opted to go travel around Europe and hitchhike and hang out.
I did. Yeah, I did that kind of really ignited my interest in global markets. Is I did a solo backpacking trip, or really ended up being 2 different trips, one to Asia and one to through Europe. And it just was an eye-opener and really saw how the world works, for lack of a better phrase. And I think put me on a path ultimately to Thunderbird and a global MBA. And then, I went right overseas. So I was hired. So I'm a dual citizen. I'm an Irish passport holder and a U.S. passport holder, and I speak Spanish. So I'm a Spanish-speaking dual citizen. I was hired by a French investment bank to go work in Singapore. It made perfect sense, right? So, we're thinking rather broadly back in the day, and I found myself in Singapore. It's just as the global markets were coalescing around the value model for Asia, right? China wasn't quite in the mix just then, but it was the Asian tigers, and I got to bank my way all through Asia. And it was in every country, and we did mainly Euro bonds and debt capital markets. In fact, this is a nice little souvenir. This is a Mont Blanc pen. It's a signing pen from a deal I did. The name of the deal was Bank de Gang Nagara. The pen survives. The bank wasn't quite so lucky.
Hey, you got something out of that at least. That's fantastic.
That's right. So, go ahead, please, Ed.
Today we're going to talk a little bit about the market. We got a lofty market. We've had several guests in the past talking about it, what could derail the market. I think that's what a lot of our listeners are interested in. Market's been on fire. What should we watch out for? Bob Carey from First Trust talked about interest rates, inflation, If the Fed started to raise the rates, that could definitely give you a correction. You're going to talk about not only that, but you're also going to talk about how you track it using tips. Treasury.
Yeah, that's right, Ed. So
bonds.
that's right. So if you watched a little bit of 60 Minutes last night, you saw Jerome Powell was on, and he was talking very much on these themes of inflation and the U.S. economy being at an inflection point where it could, depending on SARS, it could either really take off from here or we could have an issue. So the virus is still the wild card in here. But what I do is I watch the tips, the 5-year tips, and I look at the inflation premium on the tips as an indicator of what the institutional market thinks the inflation perception is, right? So tips are an interesting one because they're an indexed inflation protected treasury bond. So
they're like a bond. They're like a bond, but they have that asset to that. So it's just for the listeners to understand it.
Yeah. So the tips are issued by the U.S. Treasury. They're full backing of Uncle Sam, and the 5-year seems the most reasonable horizon to start to glean some useful information from. So the tips are issued at zero coupons, and then they're traded up in the market or traded down, as the case may be, depending on inflation expectations. So they've traded as low as negative 2.4%, no, 2.2%, excuse me, as inflation expectations were more towards deflationary, right? And now today that we've been seeing them trend up over the past year to where they're at a premium of 2.5%, okay? The average is around 1.8%. So they're trading above the average expectation for inflation. And if you listen to Chairman Powell last night, 2% is kind of their jumping off point for inflation. And they would have to see a sustained period of inflation at 2% or more. So what the tip is telling you is not only are we going to get to 2%, but we're likely be trending higher and heading, if the trend continues, more towards a 3% inflation. And that would trigger the Fed into action. Okay, so that action would be to raise interest rates, the Fed funds rate, from say where it is now at 25 basis points, right, to wherever they feel it needs to go. Now, I don't see this as a 1970s Fed where they're taking the punch bowl away, but I do see a fairly competent stewardship of the economy from this Federal Reserve. I think they're going to do okay, and they're going to, so what are they doing okay with? They're going to try to cushion any of the volatility that we might otherwise face as inflation starts to tick up. So inflation is going to be a theme, probably not much this year, but it's something to keep an eye on going forward.
We want the spike reversed from the recent spike, and what would be the question, and what would be a dangerous spike? What levels would you become concerned with the 5-year tips if they went to a certain level?
So they're very definitely trending upward, right? So we'd like to see that curve flatten or even tick down a little bit, and that can be demand, it's a little softer global demand, which doesn't seem likely in the United States right now. Last year, a year ago, we had a supply issue. We had plenty of goods and no demand. Now we've got a demand issue where we have tons of demand. We can't get the goods into the ports quick enough, right? So it's really flipped. It's amazing.
Yeah.
So we'd like to see the curve flatten a little bit, start to trend down. If there was like an oil shock or a reemergence of SARS, that might also cause the curve to flatten or tick down. So we're just going to keep an eye on how the general trends in the commodities markets are going. And we look at, gold, the dollar index, which is key. You have to watch the dollar index, right? The stock market, oil price, those kinds of things that are typical indicators, early warning systems for how the markets are heading. If I could just put a little optimism into it.
Okay.
Where we sit here on April 12th, I feel pretty good about the markets, even though they're high. We're getting into earnings season. As I just mentioned, it's really more of a demand issue right now. People have got money; they're looking to spend it. That's good for hooray for the U.S. consumer, right? We'll save the economy again. So we'll see how it plays out. But I don't feel that we're necessarily, like we're at all-time highs. So you can argue the theme of that we're overvalued. But that said, the markets don't seem to be behaving badly at the moment.
And where else would you go to if you did want to make a change? I did talk to someone yesterday, a friend of mine that sells boats, cruise boats, got big ships, tour boats and whatnot, but can't get any power boats to sell. He's completely sold out of all his inventory for this year. And he said there was a problem in the cold Texas from the chemical plants got shut down or whatnot. So they couldn't get resins to finish up all these boats that are being manufactured. So once again, demand is through the roof for boating across the whole country. But something like that affected the supply.
Yeah, no, and ultimately that's going to impact his, his own business profile, right? So there's a lot of stories like that. You can't buy a bicycle right now for under $1,000. You can't find them, right?
Yeah.
If you want to trade up and get the Ferrari of bicycles that are out there, but for the average guy that wants to spend, $500, $600, $700, $800 on a bike, they're not available. People bought them.
I got it.
The other thing, my neighbor does high-end custom swimming pools. He's booked out for the next 18 months. And it's a big, those are real pools. So it's amazing.
The best business they've ever done. Some people are telling me, I have 100% shop bike. Said the same thing. Can't get any bikes. He was happy to get 25 kid bikes come in, but very interesting. Joe, we're going to take a quick break. And remember, anyone, if you have any questions at all, you would like a free portfolio review, always feel free to give me a call or email me. You can call me at 518-255-8854, or you can always email me at edgardner@cutterco.com. We'll be right back with Money Nation.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter & Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only in as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter & Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back to Money Nation. We've got Joe Cunningham, CEO and President of Worldview Capital with us. Joe, what was your next thought you were talking about? We were going to finish up with...
let's just talk a minute about the U.S. trade deficit, which, used to be an issue and then just kind of went away. Well, whilst we were snoozing through COVID, our trade deficit's now at $1 trillion. It's by far the largest it's ever been. And it's not just that the trade deficit's big. And so, a lot of that's China related, but a lot of it also is, U.S. demand driven. We just need goods, right? So the thing with trade deficits is how do you finance them, right? So typically we would finance a trade deficit by foreigners coming into the U.S. Treasury market and buying bonds. But that number has really been off because there's no yield there, right? There's no joy in treasuries these days. So what they've been buying is stocks. So when you look at this is an argument on the stock market, too much money chasing too few stocks, right? The number of stocks that are publicly listed is in half from what it was in, say, 2007. So, and you've got all this money coming in to buy U.S. stocks, and the market's been kind of bubbly, right? It's been percolating up a little bit here. So that's how we've been financing the trade deficit. And what we have to be careful about is when the stock market looks too rich and people stop buying stocks, foreigners, right? And they look to bonds. And then the Fed will have to decide whether they want to raise interest rates to make the interest rates on the bonds appealing to the foreign investors to fund the trade deficit. So it all gets very sticky here when you're up in the upper echelons of making policy and trying to balance these things out. That's why equilibrium as an economics concept is interesting. It's meaningless in a practical term because the markets are always just kind of jumping around and doing what markets do, right? So I thought that was an interesting element of the argument here, because you could, not to be cheeky, but you could say it's a bubble financing a bubble, right? It's a trade bubble financing a stock bubble.
Why is the trade imbalance grew so much in the last couple of years? Is that
it's really been in the last 6 or 8 months. So you had the COVID thing, right? Now, if you look at the traffic in the ports, say in Baltimore on the East Coast or in Long Beach on the West Coast, the port of Long Beach looks like the harbor in Singapore. There's just tons of ships looking to offload goods. They can't get in quick enough. And then the infrastructure question comes in. How well are the ports able to manage the demand, right? And can they get the stuff on a truck and get it out to the warehouse and get it from the warehouse out to the stores and to the people? I mean, it's a huge undertaking. So we're going to have to study this a little bit, and I would like to have seen some of Biden's infrastructure bill focus on just that transportation issue, right? Upgrade the ports, work with the private companies and a lot of these port authorities, like New York Port Authority. They're managed by a quasi-governmental arm. So finance them, build new port facilities. So that's an interesting little element that's in the mix. It's a trade deficit. We'll have to keep an eye on it. And, we'd like to export more. So to export more, what we've seen is the dollar index is at about 92 right now. Under Trump, it was, for most of his presidency, was high. And then it really took a dive as we got into 2020 for a variety of reasons, COVID being one of them. And now it's hanging around 92. So that should give the U.S. exporting companies a bit of an advantage in the marketplace.
Yeah, things are cheaper than they were before, right?
It should be cheap. That's right. Against the euro and against the yen. So, I hope we're able to take advantage of it, and those ships aren't heading back to China or to Asia with empty containers, because that's what happens. So they offload the containers, and then they take the empty ones. They load up a ship like you saw on the Suez Canal. That ship had 20,000 containers on it, by the way.
Wow.
20,000. They load them with empty containers and ship them back.
Yeah, that ship is now being held hostage, by the way. The Suez Canal Authority is looking for like $1 billion. I don't think the boat has $1 billion of goods on it. Maybe they should give him the ship. But
maybe they better come up with something.
You hear arguments that the Suez Canal, not to get off track here, but the Suez Canal had their pilots on the boat. So, if the boat gets stuck, why the pilots are really in control of that boat when it goes through, just like in Panama, you bring in pilots on there and they drive the boat, and it's not your responsibility then. So I'm not sure how they want to, I read one thing, $1 billion. That seemed a little
I'll tell you how they came up with that. They need the money.
Yeah, exactly, because they lost money because they were shut down for those.
For sure. And, Egypt just needs money.
Right. Some more interesting news coming out yesterday, the Amazon vote. I know your dad was a union leader out of Utica, New York. Is that correct?
That's right. Absolutely. Operating engineers, you bet.
So engineer union. So what do you think about the Amazon? It was voted down, if we see a day or two ago. What do you think about it? What's your thoughts on it?
It was voted down. It was a resounding vote down. So it was a little shocker for me, to be honest with you. I firmly believe that labor or employees should have a seat at the table, right? And this was their opportunity to get that seat. So Amazon must be paying them well or there's something going on there that would lead people. It's the South. They don't generally go for unions, but still, I was surprised.
There was an individual on CNBC, maybe last Thursday or Friday, and he was a professor of some university, and he was talking about that he'd really dug into the Amazon benefits that the employees get, and he was just kind of raving about how good they were. He goes, I would think professors at top universities, we don't have those same benefits, he said. So he was I'm not sure what if he's pro or for or whatever, but he was talking about the benefits of the Amazon employees are very, very good. And maybe that's why they said, we'll just keep what we're doing, So
yeah, no doubt about it. I mean, there must be something to it, or you would see the unions get a little bit fair shake. So what happens next? What could happen is this starts to percolate into national legislation. So right now, to organize a union, you have to go site by site. So you go to the Amazon place in Shakopee, Minnesota individually. You go to the Amazon place in Albany, New York individually. And not just Amazon, but for all companies. I think the legislation is going to modify that approach, and you'll be able to go for a more of a blanket nationwide type of vote, and that would get interesting. The process of counting the votes was also interesting. Amazon got the challenge. So you call out the guy's name, and they two sets of ledgers, the labor's ledger and Amazon's ledger. And Amazon could object, no, he's not full-time, he's part-time, or he's on medical leave or something like that, and they cross out his vote, right? The votes were anonymous, so that nobody know how people voted. But it's an interesting way to run an election. Let's just say that.
Right. Yeah, that's true. That's true. Let's switch gears here to cryptocurrency. Heard on CNBC today, you're going to be able to buy a house using crypto, Bitcoin, maybe through your Coinbase app. Did you see that all? Did you read about that at all? It's kind of interesting.
Yeah, I did. I looked into the mechanics of it. That's what I felt was an interesting element to that story. It's convoluted. You got to have a wallet. You can't really get a mortgage on it. You've got to have
you're paying full asking price, like the whole thing.
Right, but it seems like with Bitcoin at 61,000 a coin, I bet there's some people out there who could buy a pretty nice house.
5 coins, you get you an average house, probably.
Yeah, exactly, get you a house. So, but the mechanics are clumsy. You have to have an intermediary in there that can manage the transaction for you. So you've got to be a little bit more savvy of a Bitcoin investor than say I am as a dilettante. I own a couple coins. And in fact I own 2.
That's 2 more than I have. So
that's right. Okay. So it is. It's a funny old market. We'll see how that. And look, Coinbase going public this week is going to be, huge to institutionalize and legitimize the market. So that's something to definitely keep an eye on.
It could be a $10 billion deal. With that, Tiger Global, the $65 billion hedge fund run by Chase Coleman, who used to work for Julian Robertson of the Tiger Management. They just did a raise of $6.7 billion, throwing it all into tech. They had the Roblox, they had Stripe, and now they own 10% of Coinbase. Interesting that so much money is still flowing to tech, through big companies like Tiger Global and others. What do you think about that?
Yeah, well, there's no shortage of liquidity. That's for sure. And if you're raising money for a private company right now, is a good time to be raising money. So because there are these funds out there, and they're mega funds, and they're, the other side of that is, these businesses have got to produce the value, or we'll see another WeWorks, right? You don't want to go down that path with a SoftBank in Japan.
Yes.
Where they, where they basically had to write off the whole business. They still paid the guy $1 billion, but
Other interesting, back to one more last question we'll talk about here is flying cars. Big thing I was reading about Peter Thiel. He was an early Facebook investor, and you got companies valued at $3 billion to $7 billion. I don't think they've even made a flying car yet, but these companies have crazy valuations. Ilium is a $3 billion. Archer Aviation is $3.6 billion valuation. They do have a $1 billion deal with United Airlines to move people around short distances. Yeah. And then you got Joby Aviation, $7 billion. Again, they call it flying craft that land and take off vertically. Translation, flying car. But on that Joby, you've got Reid Hoffman, founder of LinkedIn, is a big investor. So got a lot of money into these. What do you electric cars, trucks, they're huge. But what do you think about flying cars? That's I think it's a little ways off. But Morgan Stanley said $670 billion industry by 2040. A little ways away. Any thoughts on that?
Well, my first thought is that there's guys looking further down the curve than you and I. But look at the Jetsons promised us flying cars in our lifetime. So
exactly.
I guess we're going to get there.
Didn't Da Vinci have sketches of flying cars like 500 years ago, or
and a helicopter? And,
is that what it was?
But having a practical, and you can see it happening, like with the Hamptons, where they helicopter in and out of New York back to Southampton's for cocktails. It's coming. I don't know about the valuation or what once the FAA is involved, how the market's going to look, or what the runway for these guys are going to be, and I mean that kind of as a pun, but they're going to have to be flying in some pattern or another, or it's going to get a little crazy.
Kind of like the drones when they start flying. You should see more of those in the future as well. They'll be happy. Well, Joe, thank you very much for being with us. We're going to definitely have you back in the future. Love talking to you, Joe. Good seeing you. Remember, anyone, any questions at all about your portfolio, your questions, if you'd like a free portfolio review, always feel free to give me a call. You can reach me at 518-255-8854 or email me at edgardner@cutterco.com. Again, thanks everyone for being with us on Money Nation. Have a great day.